Good afternoon, everyone. It's about 20 to 2 on Thursday, 22nd of April, and you should get this with my essay on Saturday morning, the 24th of April. And as you can see on VectorVest UK and on VectorVest USA, the market has pulled back. I expected that pullback to come at the tail end of last week, but we in fact ground up on fairly low volume until a day or two ago. Volatility, especially in the US markets, incredibly large. So I want to spend a few minutes looking at a very, very simple approach to find some outstanding investments. And certainly I think that we can all make this incredibly complicated, and I have a knack for complicating things probably. So I'm just going to go to the stock viewer and have a look at the stock viewer. And this is after the close on Wednesday night, the 24th. And very simply, I'm going to adopt Susan Thornberg's approach, an eyeball approach. And clearly everything that I do here can be put into Unisearch. But I'm looking at KipTech. It's at the top, and I'm sorting by the default sort VST, a standard as it comes. New people, you may find that CI is not beside the stop in the default VectorVest. You just got to drag it across there. It's such an important metric that I keep it close to the action. So KipTech, it's trading at 292. It's worth 464, so it's undervalued. The RV is 1.61, and that's saying that over a window of 3 years into the future, this share should outperform a AAA rated corporate bond by 61%. Now that's a really great number. Anything above 1.3 is a good number. And a big part of relative value is earnings per share growth. And as I've said and quoted Benjamin Graham many times, earnings per share growth is the engine that drives the share price. So outstanding number. The relative safety is on borderline of being a worry-free stock. A bit low. I like relative safety to be about 125 on a worry-free stock, but at 1.16 it's fair. RT is at 1.75, which is saying it's pretty much going up vertically. And when we put those all together, it's got the highest VST in the entire London market. Not surprisingly, it's on a buy recommendation. There's the stop loss. CI, which measures the long-term trend, a good 1.27, and it's going to grow earnings at a fast clip of 32% next year, which is quite something. So that passes. The next one is Jarvis, which is overvalued. So we'll give that a below RV and RS. Look good, but it's trading above the VectorVest valuation. And in markets that are maybe stretched, certainly in the US they're stretched, let's focus on shares that are trading below the VectorVest valuation. Going to give investment trusts a miss for the moment. Future, just hold the control key down. Future is undervalued. RV 1.61, RS 1.25, moving up into a worry-free category. When we put RV, RS and RT together, the VST 1.27, it's on a buy. And as you can see, the CI a whopping 1.72. It's going to go earnings at 35% next year. That's N. CMC would certainly be in. 504, 648, 166, 123, and the GRT 35. So that's in, and I've gone through these before, and I'll go through them quickly now. You can work through them yourself. Tandem is in, very small company, but it'd be in. The relative safety just getting a tad low, but it's in. What else have I put in? 888 is above its value. I put in Crichton's. Numbers are impeccable. Gamesys there's a deal there, and those of you that follow the Monday afternoons will know that we made really good money in that. Bought it at 14, sold it at 19.50, and that came from one of our subscribers. One of the great joys of VectorVest at the moment is the ability of our subscribers around the country, unbelievably strong. Lion Trust, I'm a shareholder, and it would certainly be in by these criteria. Marlowe, a small little company, but certainly would be in by these criteria. Marlowe, very defensive in that it is completely dependent on compliance in all sorts of industries, and it's got a recurring income stream, and if you know compliance as well as I do, it's not going to go away, good times or bad times. So, and our old favourite SLP would certainly be in by those criteria. So I'm going to chart those, and I found them, I think, very quickly indeed. I'm going to chart them. They're all undervalued. They've all got a high RV. They've got a reasonable RS. They've got a good to excellent CI, the long-term trend, and annualized growth rate. Percentage annualized growth rate is also good. So they're ticking well on all the VectorVest boxes. And as Dr. DeLito says, and I've tried to put across in our essay this week, is that if you buy the very, very best shares, then the ball does a great deal of the work. Now, I always start, folks, with a weekly chart. And a weekly chart over 3 years. Now, I know the earnings per share, gentlemen, the two marks and Bill up in Scotland look at a 5-year view, but please yourself. But I think it's really, really important that you have a look at the longer term trend and weekly charts. Now, there is a great bit of confusion out there, and I hear it all the time from people. They say, well, if we can make a lot of money looking at a daily chart, surely we would make more money looking at a 30-minute chart. That is certainly not the case. And I'm 100% sure that most people would make more money by looking at a weekly chart than a daily chart, because it keeps them out of the noise. There's Cape Tech. Now, that's my standard layout, and I spoke at the VectorVest forum about the role of volume. And I'm going to try and weave that into my story, but there is the price in the candlestick format. You can see two moving averages, 21 and 55. Now, because this is a weekly view, ladies and gentlemen, and just make sure that it is a weekly view. It should say weekly up there or daily, depending on what the Americans call the periodicity. What a wonderful big word. If that is a weekly chart, it means that this is a 21-week moving average, and that's a 55-week moving average. Now, those of you that know me will know that on the daily chart, I use the same moving averages. And if you ever get around to doing an intraday trading course of mine, you'll see the same moving averages on a 30-minute chart, which is the time frame I normally use to trade the S&P intraday in the afternoons, if I'm feeling up to it. The green line is the VectorVest valuation. And the blue line is forecast earnings per share. Now, the thing that comes out of the earnings per share, gentlemen, is that forecast earnings per share should be rising over the time period, either 3 years or 5 years, smoothly and linearly from the bottom left to the top right of the screen. And as you can see on Cape Tech, the earnings per share has risen from threepence to 13 pence over the last 3 years, which I think you would agree is quite a clip. The value seems to be moving away from the price, and I know that Steve, our young man out in Oxford who talks about the RT40 indicator, looks upon that as a leading indicator. Markets love to pull back into this zone between the moving averages. And I don't want to digress into Fibonacci's, but that tick That lowest tick just here was a 78% retracement of that last pullback. And the market didn't go there by accident, folk. It went there because some very clever fella had worked out the 78% level and put an order in there, and the market went to the order. Remember, the objective of a market is not to make you rich. The objective of the market is to actually fill orders. And that's exactly what it did. It went there. Now, if you look at volume here, so we've got an undervalued share that's growing earnings strongly. As it broke out of this range, you can see the volume kicking up. Now, that's a really, really good sign. So if you see big up days on big volume, that's a really good sign of accumulation. We put on the crosshair, you can see those 2 days, huge volume. Now, this is really important here over the last little while, because we had big volume going into the share here, and then it actually goes back for 2 days, 2 weeks, should I say, 2 weeks. And if you can look down here, there was hardly any volume at all. And that's what I tried to put across in the forum last Friday. No volume in there, no supply. Anybody who wants to buy it has to pay more for it. Now, where is it going from here? Well, it can keep going, that's for sure. My technical background, sometimes it's a help, sometimes it's a hindrance. But I can see some form of triangle here. And that distance should be repeated. I find it very difficult to buy in after it breaks like this. And if you do buy into it now, by all means, it can keep going, and I hope it does. But your stop loss needs to be well out of the traffic, and the VectorVest stop loss is down to about 250. Okay, so you need quite a big stop loss to keep yourself in that. I think it looks good now because it went up on huge volume, but as you can see, it's now going sideways on virtually no volume. So I believe the probabilities of another leg up in this share are really, really good. Okay, but I like to be a buyer myself on that pullback where resistance turns into support, and somewhere between the 21 and the 55 moving average. Okay, so that's Cape Tech. I think there's a great deal of opportunity still in that stock. I would like to get it on a pullback to that old high. And if I can get rid of everything off the chart now, get rid of all my lines. I hate cluttered charts, as you know. I think that what can easily happen is these moving averages can catch up with the price action. But it can go. It can easily go from here. It's just going to take quite a large stop loss to keep you in the game. So looks good to me. Now this is future, and future again. Look at that beautiful earnings per share. Okay, and it's slightly undervalued, which is fine. And as you can see, what I was trying to get across in the last little bit, it came back here into the zone and kissed that level. Now that's not an accident. That's because somebody had his order just there and the market went to the order, and it looks to me as if this wants to go. So that looks like a worthy investment. CMC, nothing quite, well, maybe iron ore is as volatile as spread betting companies. It's getting close to fully valued. I don't like, ladies and gentlemen, here great deal of accumulation. You see upswings, big volume here, but this last run up hasn't happened on big volume at all, so I would personally leave that. Now this is Tandem. That's 35 million market cap, but somebody's buying this. Look at this huge, as the moving average is crossed, as it broke out of this range that it had been in forever, a huge volume here. Now, this share is not researched, so clearly whoever put that big order in there had a sniff of something from very close to the action, I would have thought. So, as you can see, it came back here to that last old top, and it's now broken out. I'm quite sure that the spread on this is like the size of the number 27 bus. that I frequently take to Hampstead. So that may rule that out, but nevertheless that looks bound higher, and we found it in seconds, folks, just by going through a very simple approach. Look at this wonderful accumulation in this share as it goes up, and the last few days still on good volume. You see how it in fact stopped for 1 week, and on that week lower volume, so it probably needs to pull back a little bit here, so maybe not for everybody. This is Crichton's, and Crichton's, again, earnings per share rising strongly. It's gone up 3x, and I would suspect, folks, that it's going to come back and kiss that top, and that's where I'll be looking at buying into it. And I bought into it here just about there myself. Can you see my little line still on the chart? It's very difficult to give up your trend line construction when you've been using them for 30 or plus years. So this is Lion Trust, as you know. I've been a shareholder in this since last April, and we sweated it through this little bit. If you remember, we discussed at length on a Monday afternoon why I didn't take that stop loss. It only flicked for a few. It was there for a few days. This is rising. Volume is not great. Volume is not great. I'm very happy with this, and the earnings per share has been outstanding over the last little while. So I'm quite happy to hold that, and I think that's a possible investment for everybody. This is Marlowe, and Marlowe, as I say, is in the compliance business, all sorts of compliance, just not for financial companies, for fire and safety and all sorts of things, and growing by acquisition, and with a recurring income stream that the market really likes. As you can see, it's gone from making nothing to making 30 pence a share, and as you can also see, people are scrumming to buy into it. So 2 million shares traded a few weeks ago. So that's something certainly to keep on your radar, and a small company, but I think that's got a great deal of potential. As I say, we found it here in seconds. This is Sylvania Platinum, and we've followed this very closely. I'm an investor since 47, and I've added to it on the way up, but this looks wonderful for more. Nobody knows what's going to happen next, folks, but by doing this wonderfully linear earnings per share growth, a share that's undervalued, trending up quite nicely. And as you can see here, as it rose, people are scrumming. And again, I apologize for the rugby metaphors. People are scrumming to buy into it. Pulls back on falling volume, no sellers. And what's happening here in this run-up is that huge accumulation. You see that? And now it's going sideways, folks, on virtually no volume at all. That's saying to me there's no sellers out there. And if the earnings come in as we expect, then anybody who wants to buy it is going to have to pay more for it. So we don't know what's going to happen next. But if we actually invest in the very, very best stocks, that's a huge edge, and you can find them very, very easily on the stock viewer. And clearly you don't have to eyeball it the way Susan has instructed us. You can write a Unisearch to do the same thing in seconds. I hope you find this useful. On Monday afternoon at 1:30, we'll go through all of this again, looking at the American market, the UK market, looking at copper, looking at gold, which is looking better than it's looked for a very long time. Keep it simple, folks. Start with the weekly chart. At this stage of the game, look for shares that are undervalued, that are growing earnings strongly and smoothly. And if you see the price rising and volume rising and the price pulling back and volume contracting, then that adds greatly to your ability to be able to spot winners. It's a very, very simple visual examination. Thanks very much.